Hey everyone, welcome to Bits and Bips, where we explore how crypto and macro collide one basis point at a time. We're here to discuss the latest stories in the worlds of crypto and macro and have an excellent guest today. But before we begin, a quick commercial break.
Fidelity has been investing in blockchain since 2014. They're not wondering if digital assets will shape the future. They're hiring the talent to help ensure they do. Explore opportunities today at crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. This episode is brought to you by Cape, America's privacy-first mobile carrier. Same premium service you'd expect from any other carrier, but designed so your number, your location, and your data actually stay yours. Get 33% off 6 months at cape.co/unchained. Heads up everyone, we've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
All right, welcome back. And as always, I'm your host, Austin Campbell, High Scholar of Zero Knowledge Group, here with my co-hosts, Ahluwalia, Maester of Wealth, leader of Lumina, Chris Perkins, the golden hand of 250 Digital, and Sam Enzer, the warden of CahillNXT. For those of you who don't know Sam, by the way, you should. He is one of the lawyers deep into the crypto world and has thought about these things for a long time. Today, though, we're going to start talking about the Fable 5 ban. So what's going on? The U.S. government issued an export control directive citing national security concerns, suspending all access to Anthropic's Fable 5 and Mythos 5 for any foreign national. That includes Anthropic's own foreign national employees, forcing Anthropic to abruptly disable both models worldwide for all customers. All other Anthropic models are currently ineffective, but Anthropic received the directive at 5:21 p.m. Eastern previously, and the government's concern was stated to be a jailbreaking of Fable 5. So let's talk about Anthropic first. They said the demonstrated technique for jailbreaking found, quote, a small number of previously known minor vulnerabilities. Other publicly available models are able to discover them as well without requiring a bypass, and they named OpenAI's GPT 5.5. They also said, quote, we disagree that the finding of a narrow potential jailbreak should be cause for recalling a commercial model deployed to hundreds of millions of people. It would essentially halt all new model deployment for all frontier model providers. Now, on the other hand, the administration's case, and this was David Sachs, said, quote, Fable is Mythos with guardrails, but if those guardrails fail, then you've exposed Mythos and its advanced cyber capabilities to people who shouldn't have them. The admin asked Dario to fix the jailbreak or dedeploy the model. Dario refused. Anthropic prioritized the continued offering of the consumer model over safety, and the ball is in Anthropic's court. Now, acknowledging upfront that we don't have a full story from either side, and we're still trying to figure out what's going on, I wanted to start, Sam, in particular with you, because I know you've dealt with crypto and seen administrative actions previously. How are you taking this whole thing apart? What do you think here?
Sure. Great question, Austin. Ram and Chris, thanks for having me on. So this is an interesting, we're in an administration that has been in many ways a huge friend to the digital asset sector and to the AI industry. And the president has made clear he wants to remove red tape and make America the capital for crypto, for AI, for tech in the world, and to create the kind of regulatory environment that will attract entrepreneurs to build here and disseminate their products, right? And for AI, we're in a race against China in many respects. And in the blockchain industry, there are many projects that integrate AI with crypto, integrate AI with DeFi, and regardless, have some of the basic tech infrastructure that could be regulated by export controls. So how do I take it? On the one hand, I think because this administration has been so friendly to the tech industry, and you have the statement from David Sachs about why, you can imagine that, just taking a step back here, we know that Mythos is extremely powerful and was in many ways marketed as something so, too hot to touch, right? So dangerous. Fable is supposed to have safeguards, and you could imagine, according to the reports, and I don't know if these are true, but what I've seen in the press is there's reporting that Amazon's CEO told the administration there was a jailbreak, in other words, a way around the safeguards. And 24 or 48 hours later, you've got this 5:21 p.m. Friday night directive not to export it. So on the one hand, you can understand as a human who may be concerned about national security why the administration would react this way. On the other hand, as somebody who has lived through what I'll call the Howie or the Gensler wars, watching, not necessarily this administration, but government officials take ambiguous regulations or ambiguous statutory authority and then use it to crush developers, innovators, and businesses. It is concerning when the government has the power to effectively ban the dissemination of software, of ideas. There is well-established case law that source code software, including encryption software, is literally speech, is literally protected speech under the First Amendment. Here, we have not, some of the things that are concerning about this, and that's not to say the government doesn't have a valid basis, but there's a question of what's the substantive basis, and then there's a question of the process. And here, we don't have, as the public, we don't have much process. The letter that was reportedly sent by the Commerce Department to Anthropic has not been publicly released. We have a description of it from Anthropic, but we don't know what it says. We don't know what the concerns were, what the national security concerns reportedly or allegedly were. We don't know what the statutory or regulatory authority for it was. And this could have, if this power is abused, it could have sweeping implications for the AI industry, but also for the crypto industry, right? I mean, just taking a step back, what happened here is the regulation invoked, the export control, regulates the export of what? Here, we're talking about APIs, okay? Does that mean if I have a US server with an API and someone in China accesses it, that's an export? If so, does that mean the export power can be used against any US-based server, API, or technology? And there are exemptions or exceptions for export regulations for things that are published, which has often been why permissionless DeFi protocols, you don't see them getting regulated through export directives. That said, what if I have an API? What if I run a front end or a DeFi protocol that relies on an underlying AI model, like Fable or something else, right? This opens kind of a Pandora's box of government authority for an industry.
I'll say for my part, having lived through the Operation Choke Point side of the Biden administration as well, some of the arguments that I'm seeing here, I worry, even if the people currently in charge believe them, are forming a playbook to misuse them in the future, right? Because now we live in a world where you can point at any frontier development that might have cybersecurity or financial stability implications, say the words national security, and then start imposing things like export controls. To me, the question is, where is the limiting principle? Like one of the beautiful things about crypto is you meet an incredible amount of interesting people working in the space. And one of the ones I've met is Gene Hoffman. And if anybody remembers the original encryption wars, Gene was at PGP at the time that was happening and was the guy carrying around a physical book of printed code, right, to get around export controls because the First Amendment allowed him to do that. And I think it is a fascinating thing to see all of these principles that we've been fighting about now for 20, 30 years coming back front and center with this discussion. Because what I will kind of raise here, and Chris, you've lived through some of the national security side of things, those concerns are not invalid. There are genuinely valid national security concerns if people could use these tools to damage the United States. But how do you contextualize those? Where would you put a dividing line? Because you're also somebody who's operating.
National security will always trump responsible innovation, no matter what. And if you look right now, a lot of the vectors of attack you're seeing in Congress right now on the Clarity Act, maybe banks aren't so happy about interest anymore, and maybe there's a different way to kill this thing by going after national security, right? So that is always the trump card, no pun intended. As you look at this right now, I was at this event this morning and I spoke, and afterwards Hillary Clinton came on. And the one thing that jumped out at me, and look, she was very articulate about her perspective around Iran, and maybe we'll talk about that later. But at the end, the moderator said, "Hey, what keeps you awake at night?" And she said, "You know what really keeps me awake at night? AI." And so if you think it's bad right now with the government intervening in Anthropic, and I think we could have a long debate about whether this was politically motivated or whether it was not. And then some people say, oh, they just hate Dario, so they're going after him. But I think we're just getting warmed up. And I think AI has a pretty big problem right now that crypto got in front of, frankly. Maybe our PR isn't the best, but we had a very good game in DC. But I think both these technologies have a PR problem. And one thing as we're going into elections, midterms, I saw a lot of Democrats get on stage this morning and talk, and they emphasize moderation. But then Hillary came up and said, AI keeps me awake at night. So I think we're getting warmed up. I love the fact that you mentioned the encryption wars, because we continue to bump up against this every time there's a new technology, and over time, we figure it out. The problem is what do we do? You have the Chinese that are coming up with very sophisticated models, very cheap models. The more and more we get involved in and put our hand in government and overregulate it, a couple of things are going to happen. Number one, consolidation, right? We see it over and over again. Regulation leads to consolidation. It boxes out entrepreneurs because it's very expensive. And, you listen to the all-in guys, they're like, hey, that's the playbook here. Get big enough to create that regulatory moat. And that's been the game. That's been the game for a very long time. And so that's the risk that we face. I don't think you can put this toothpaste back in the tube. And then it brings you back to this whole idea of decentralized AI. And we've been in this space, for a very long time. Very, very hard, unproven. And there are parts of the stack that you can decentralize. But generally, you always have somebody centralized no matter what, whether it's that front end or something else, they're going to be subject to regulation. So maybe the future is like the AI mullet, where you have the decentralized AI in the back end. I don't know. But I think this is going to get much more complex. I think it's only going to get worse because, if the Trump administration is already taking this much of an active viewpoint, then I think the Democrats are going to be. Last thing is that we're in this period right now of max concern because there's just these models are moving faster than our security. Eventually, I think we're going to reach a stasis where the models actually fix the security. And once your vulnerabilities are fixed, maybe you get some very sophisticated ones that pop up in the future. But we should end up with a much stronger environment from a security perspective once we've had the time to implement these models. So hopefully that plays out in the future.
Yeah, nodding my head at the comments. I mean, overall, the limiting principle is the U.S. Constitution, specifically the First Amendment, to Sam's point. This is an overreach of the federal government. It's disappointing, right? I know growing up, I read Ray Bradbury's Fahrenheit 451, which was a lesson on the concerns around burning books. We read about George Orwell, 1984. There's Kurt Vonnegut's short story, Harrison Bergeron. It's so surprising to see this come from this administration. And in the future, we're not going to have our kids read books. They're going to have access to intelligence on demand like a utility. It doesn't make sense for the role of government to restrict that. There's no due process. National security has been used and abused to contravene on natural rights, and it's being abused here. I agree also, AI is becoming a political issue. I had a chat this Sunday as my Verizon Fios went down. I call in to get it repaired, and I asked the service operator, I said, oh, like, where are you based? Just making some chit chat while the IP is updating. She said, I'm in Virginia Beach. I said, oh, that sounds lovely. She said, no, it's not. They're building a data center here. And I said, oh, well, it's just a one-time construction issue. She said, no, it's already up and running. It's whirring, it's making sound, my utility bill is going up, it's having environmental damage, her words. So this will be a continued issue. You know, AI is important for unlocking the potential of humanity, and you need political leaders at this time to step up and communicate that story. What's more likely to happen, though, is that AI will become a punching bag and used to create the next enemy or scapegoat. So yeah, I agree. You'll see more backlash, and I think Anthropic is betting on a change in the midterms. They have a bunch of ex-Biden staffers, is my understanding too. That dynamic is in the background.
How much of this though, right? Because like OpenAI clearly caught a stray in Anthropic's like commentary on this, and yet nothing has been done with them. We haven't seen anything coming out about like Grok or any of these sorts of things. How much of this is related to what Sam brought up earlier, which was Anthropic's own marketing of its own models? Because if you run around saying my model is an existential threat to cybersecurity, whose fault is it if people take you at face value?
They have the best model. They have the best model on the block. But I think, yeah, Chris is right. It's not the proper role of government here to set cybersecurity policy. It's company IP property, and private enterprises very good at identifying issues and risks of their business and innovating new solutions to address it. Like Y2K should have been a bigger issue than this. You didn't have national security telling private companies to go address this Y2K bug. Private companies identified the issue and they invested in technology, and it became a non-issue. And that should happen here.
It's very.
Oh, sorry.
Ahead, Sam. No, you go, Sam. Go.
I was going to say that I think the problem here, right, is if in fact this type of, if you really are concerned about national security, you can't stop Chinese models, decentralized models, or anyone who was able to crib the Mythos or Fable tech in the period it was out and deploy it, right? So this isn't really, if you're really truly trying to solve for national security, this is not an effective solution, but you are disabling the market from getting up to speed on it to fix it. And if we believe in the free market, then we should let the free market toy around with this.
What makes me crazy, people get freaked out about tech. They're naturally scared of it. And the immediate response is, let's go after the tech. Let's regulate the tech. Let's attack the tech, right? But the point is that it's not the tech that does anything. It's the users. It's the people. It's the institutions, and it's the governments that use it. Like, maybe we should get rid of cell phones, because you can do a lot of bad things on a cell phone. And I talk about this all the time. When I was in Iraq, we would get blown up by garage door openers. They'd trigger IEDs on us. So like garage door openers, let's get rid of them. They're dangerous technology, right? So like, I wish we would focus more on the behaviors and hold people, the front ends, accountable, rather than just go after. Like, if you use Mythos to hack somebody, well, let's go after those people and those institutions and hold them accountable. Like that, I feel like we always default to the tech, and that's the wrong place to default.
I feel like it's also the lazy path in some ways, because people, and by the way, back to Sam's earlier parallel with crypto, people have this problem with the internet now where it's global. And so you naturally want to expand your reach to regulate things, but some of those people might be outside of your specific national borders. I don't think anybody's really come up with a coherent, call it theory of regulation in the internet era, where we can effectively address those things without also stepping all over extraterritoriality. And I feel like as a result, they reach for the lazy solution. Like, Sam, you do a lot of legal work in this space. I guess I would ask you, if you were advising the US policymakers thinking about this right now of how to balance these concerns, like, and I'm going to put you in the awful spot of thinking about having to make this decision yourself, how would you be approaching this right now as the US government?
So I think the first thing is they have to communicate their reasoning. If it is in fact a valid national security concern, it is very important. There are mechanisms to regulate through notice and comment rulemaking, which is the bare bones of democracy, right? The bare bones of due process. This goes around that. That's extreme. Fine. But lay out, what is the concern? What is it? What is your statutory authority to do it? That is, at a bare minimum, is very important so that all of us can understand what is the framework here. When President Trump came in, he rescinded, there had been an AI diffusion framework set up by the Biden administration for how the export regulations would apply to AI models, and he scrapped it. Okay, but we still don't have a replacement, right? So what is the framework here? What is the precedent being set here? If you want the AI application makers like Anthropic, OpenAI to comply, to take safety seriously, to have those guardrails, you need to set the rules of the road. And that's not my own message. That's the Trump administration's message, right? The complaint against Biden and Gensler was regulation by enforcement, not guidance. Okay, well, that approach needs to be taken here.
I think that's actually quite fair in terms of say what you mean and write it down. In many ways, it echoes the complaints about like secret proceedings at FISA courts, right? And privacy violations there is you have all these undisclosed things that we never know about. You took a bunch of actions and we have no way to know if they were completely valid and totally reasonable or complete nonsense and violating the rights of Americans. So I guess step one is transparency and sunlight are going to be the ultimate disinfectant here.
For sure. It's hard to go beyond that because we don't have the facts. We have Anthropic's version. I'm not saying they're wrong. I just don't know. You've got the Sachs statement, which gives you a window, but that's not sufficient data for me to make an assessment of what exactly is the rule. How does this rule apply to the AI industry, to the DeFi sector, to blockchain? All of these are unanswered questions. With something this dramatic, we shouldn't have those questions.
Yeah, you could see that, you know, based on this, and again, we haven't even gone through midterms yet, and if the sentiment continues to deteriorate, it does seem like now's the time to push for decentralization. That seems to be one of the solutions. Now, that doesn't make it easy if you're a centralized provider trying to access a technology, but we're seeing that in crypto markets where that narrative is really starting to pick up right now, because that's always been first principle. You just can't trust governments, whoever they are. Decentralization is the way. So I think there's more to follow on that. I think, like I said earlier, governments are just getting warmed up on this technology, and I think it's going to get worse from here.
I said, I think it was back on Odd Lots in 2024 that people should be worried about the Bitcoin strategic reserve for this exact reason, which if you go around marketing yourself as a tool of national security and strategically important, eventually the government might do something about it. One of the things I worry about with this is if we actually believe that, say I'm back to the concerns with crypto, did we not just create sort of the playbook for the US government trying to control, Bitcoin mining here as a matter of national security? Like if we saw the Chinese accumulating a lot of it, would we try to commandeer a bunch of hash rate and, essentially fork the chain or something? Like, I don't love where this leads without a dividing principle. So I'm inclined to agree with you. The number one thing we need to see here is why, because you can easily argue why Anthropic would be motivated to lie, and you can easily argue why the administration would be motivated to lie. And without seeing what really happened, I don't know that we as outsiders have a great way to sort of referee this thing, for lack of a better way to put it.
Right. I'm sure journalists or professors at NYU can do Freedom of Information Act requests. And if you want to talk about doing one, we should talk out offline after this. But obviously, when there's an ongoing investigation, when there's a national security matter, those are some of the classic situations where the government won't release information.
Yeah.
So at this point,
Austin, don't
Trump
go ahead, sir. Don't throw shade on the Bitcoin reserve. I still want that. And I want an ETH one. I want every layer one that holds on to stable coins. It's a strategic commodity. Let's go. Come on.
Be careful what you wish for. This is going to be one of those monkey paw curls moments if you're not careful.
I think it's going to be just fine.
All right. Well, before we move on to our next topic, we have to do two things. The first of those is we've got to let Sam go. So Sam, I want to say thank you very much for joining us today. We really appreciate your time and your thoughts. And for those of you in the world who aren't following a lot of Cahill's writings on topics like crypto, you should. They're great. Second of all,
Fidelity has been researching and investing in blockchain since 2014, long before it was a headline, and they're hiring crypto and DeFi professionals to join their team and discover what's next in finance. Fidelity is looking for people with fresh perspectives from different backgrounds, whether it's tech, UX, or product design, whether you're crypto savvy or crypto curious, as long as you have the passion to make a real impact at a company striving to make finance accessible to all. Explore crypto careers at Fidelity today and make the decision that could change your future for the better. Visit crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. If you hold crypto on your phone, your biggest vulnerability isn't your wallet, it's your carrier. AT&T, Verizon, and T-Mobile have been breached again and again, and SIM swaps are still one of the easiest ways for attackers to drain accounts. That's where Cape comes in, America's privacy-first mobile carrier. Same premium service, but Cape rotates the identifier on your SIM every 24 hours, deletes your call and text metadata after a day, and protects against SIM swaps with a 24-word recovery phrase that only you control. You also get 2 middle-to-end encrypted secondary numbers for banking and signups, so you stop handing your real number to every app that asks. Go to cape.co/unchained and use code UNCHAINED for 33% off your first 6 months. Heads up everyone, we've now fully transitioned Bits and Bips to its new dedicated channels. So if you're not yet subscribed to the new Bits and Bips channels on X, YouTube, Spotify, Apple Podcasts, or wherever you get your podcasts, go there and subscribe now. For the next few weeks, we'll play segments of the full interviews on Unchained as a reminder, but for now, you'll only hear those short segments of Bits and Bips on Unchained, no more full episodes. You can get links to all of the dedicated channels with the full episodes at unchainedcrypto.com/bits and bips, spelled BIPS. Thanks again.
welcome back, everybody. And in other big news that's been happening, SpaceX had a over $2 trillion debut. So SpaceX IPO'd on June 12th, ticker SPCX, do not accidentally buy Virgin, priced at $135 at the offering, which was a 1.77 trillion valuation. They raised $75 billion and then closed on day one up 19% at 161.11 and have traded even higher than that today, briefly valuing at, 2.25 trillion intraday. And a lot of people, as you can imagine, are very excited about this. So the bull case has been that SpaceX owns the entry toll to a lot of markets, basically all markets involving space, as the one company with significant launch capacity. The, call it flagship product there, is currently Starlink, but there are many other things you can do with reusable boosters to bring people into orbit. On the other hand, the bear case, so take Ed Dowd, ex-BlackRock, it's priced at an outrageous multiple, about 95 to 100 times revenues. That's just absurd. It's going to deflate over the next 6 to 12 months. Great companies and great stocks are two different things. And Logweaver on X said 15 billion in annual revenue, a 1.77 trillion valuation. that's not pricing a company, that is pricing a thesis, and that insiders hold 3.75 billion of shares with no lockups and more coming in a couple of months. Also, as an aside, on chain, 300 million in USDC trading for SPSX on Hyperliquid, a global 24/7 market in parallel with the traditional exchange, and that the Friday snapshot was NASDAQ 172.86 and Hyperliquid 172.62. So starting here, Ram, I'm going to start with you as an investor. As we look at SpaceX, one of the things that I've observed is that people have a hard time breaking apart the mission of SpaceX, the valuation of SpaceX, and their personal feelings about Elon Musk. So looking at that hairball, how do you feel about SpaceX, the stock in particular?
Yeah. So Elon is one of the world's greatest entrepreneurs and one of the greatest marketers and storytellers of all time. SpaceX, I'll update you on some of the numbers here. Its price to sales is now 135 times. It's up about 30% since the IPO the last 2 days. Now, most IPOs, including blockbuster IPOs, including, say, Coinbase, including Circle, which we saw last year, including Meta, they tend to decline. And it's a very clear and significant effect, especially as you start to get closer and closer to these unlocks. Elon now is over $1 trillion net worth. There's a story there also. But this is a bad investment. It is not a great idea. You should recognize that sometime in the next couple of weeks or months, again, as the unlock comes online, this thing is going to go down. Tesla, when it IPO'd, certainly at much lower valuation before Elon had fully established his, cult. If you bought immediately around the IPO, you had to wait until November to get your principal recovery. And it really wasn't until 2020 that Tesla really took off. So people often remember history incorrectly. This is not the next Amazon. Again, Amazon went public as a small cap at a $500 million valuation. This is a $2.5 trillion valuation company. It's in the broadband business, which doesn't trade at a high multiple, and their competitors for Starlink, including Verizon. It's in the rocket launch business. It's got competition from Rocket Lab, which I believe was just included into the NASDAQ now. I think one of the major index committees accepted them into that. And they've got competition from Jeff Bezos coming online. And we don't see the end demand that's substantial from government, enterprise, and consumer behind it, right? What's exciting about the AI theme is you've got these big Max 7 businesses, defense, and sovereigns spending money on AI. That's real demand fueled by profits. We're not really seeing that in the space story yet. So I think this is a hard avoid. It is a sign of where we are in the cycle. I was traveling this weekend and passing an airport, and just the timing was really fortuitous. That the guy next to me called his wife. He was a boomer, like late 60s, I imagine. And I think the second thing out of his wife's mouth after was like, "How was the trip?" was, "Did you buy SpaceX stock?" I was like, oh, that's interesting. Every now and then you get to see the person on the other side of your trade. That was one of those moments. So I don't think it's a good investment here at all. I think it's cut and dry. Also, it's not even ambiguous.
Chris, what do you think?
Gosh, well, let's start on. I'll let Ram handle how he thinks about the valuation of the underlying asset. But one thing that we saw really interesting for a second time is that we had pre-IPO perps in place for the first time, that are really starting to come on the scene, and you're going to see it again and again. And these instruments are now proving an important data point to see how these IPOs perform. And I think it could open up and really help catalyze the IPO markets going forward, because issuers can better time their IPOs or even facilitate direct listings, which is what Coinbase did to Ram's earlier point. Maybe you don't need the banker necessarily. And every time we have an IPO and the pre-IPO markets, provide insightful data points, I think it builds on that narrative. And then eventually someone's going to say, well, wait a second, I'm going to start monitoring these things and help time my go-to-market, maybe even via direct listing. So I thought that was another general success story out of this. Look, Elon is the Thomas Edison of our era, one of the best entrepreneurs in the world. Ram, yes, marketing. He's also an incredible fundraiser. Like, this again proves how good he is at fundraising. He can tell a story. He can tell a narrative. He can get the capital behind it. He thinks big. So lesson to every founder, like, watch this guy. He can sell a story. He's operating in some really interesting technologies, environments, space. He's in AI. He's going to put the data centers in space where he addresses the energy issue. Maybe he addresses the cooling issue. And I think he's able to capture this idea in people's minds, and he surrounds himself with some of the best scientists. Big question for me is, okay, we've gone through this IPO. Not sure where the market goes from here. We have a couple more IPOs in the horizon. Anthropic, who knows, after last week, we'll see what happens. And then you've got OpenAI as well. If we successfully navigate these IPOs and people are really concerned about that sucking sound of all the capital coming out of capital markets, crypto markets are doing just fine right now. We didn't see them drop precipitously post this IPO. It feels like they're starting to build again. I'm wondering, are these some of the signals that we're going to see for capital to push back into crypto once people get tired of the AI trade? Is crypto going to come back in favor? That's what I'm looking out for.
So as I've been watching this, I kind of view what's going on with SpaceX as, call it the immovable object meeting the unstoppable force. And what I mean by that is, on one hand, you would say never bet against Elon Musk, right? I completely agree. He is one of the greatest entrepreneurs of our time. Some of the things he's built are truly incredible. And regardless of what your personal opinions on Elon as a human are, electric cars, reusable rockets, internet from space, like, the guy just builds incredible stuff. And by the way, as somebody who's got a lot of neurodivergent friends, I think people need to cut him a little bit more slack on that front as well, on the personal front. On the other hand, though, something all of us in crypto are highly familiar with is the classic, like, low float, high FDV token, right? Which is to say, these things parabolically go up and then come back down and just bleed out over long periods of time. And if you look at the SpaceX IPO, it is a low float, high FDV token, because the current number is what, slightly less than 5%-ish of stock is publicly trading. So most of this is locked up and in the hands of insiders who are going to unlock over time, including over the next 6 months, and be able to start selling into the market. And we've seen what that chart looks like time and time again, which is a squeeze at the start, and then it starts to bleed out as these things happen. So for me, as I'm watching this, one, it's not an obvious short right now, because this can definitely go up while we're in the low float area of this. But over time, I have a very hard, sort of situation if I believe that SpaceX is going materially up from here. Because these sorts of dynamics for float tend to be downward trends over time. And two, all of the mega cap IPOs have had 50%-ish drawdowns in the same year in which they were issued. So my central thesis right now is, even if you like SpaceX as a company, I feel like you're going to be able to buy it on discount in the future compared to where it is right now. So Ram, do you think I'm missing anything there?
I think you nailed it. This is really easy. It's an avoid. It's a wait. The VCs will have to crystallize the returns also. So after this lockup, they're going to say, okay, sell. I got to lock in this incentive fee. And there are a lot of VCs that are in this name, and they're going to recycle that back to their LPs to launch their next venture fund. So the incentives around this are just not good. It's not a good deal. What's the opportunity? It's the exact opposite. So what happened the last 2 weeks was that investors sold off securities to go buy SpaceX. So if you look at the other names in the Mag 7 complex, or just stocks in general, last week you saw people selling Microsoft, Meta, NVIDIA. They hadn't gotten this cheap since the recent Strait of Hormuz crisis. And in fact, in some cases, they got as cheap as in that moment of time. So now that all that selling was done, they had to sell stock to go fund the purchase of SpaceX. You want to do the opposite. Go buy the stuff that investors sold off. That is being offered at a discount. You have 24% year-over-year earnings growth. The S&P is going to break 8,000 plus easily. Rick Reeder from BlackRock came out today saying that you could get quite a bullish setup in the market. I agree. So that's the move to make is buy the anything but, SpaceX.
So, I mean, something does feel a little broken here, right? Like, why are we waiting till companies have trillion-dollar valuations before they go public? Like, who missed out on all of that incredible growth? It was, normal people. And so I think this is probably in the back of Chairman Atkins' head. How do I make IPOs great again? How do I make companies go public earlier? We've talked about this. 80% of companies with over $100 million in revenue are private. Like, this is another thing. How do we fix this? It seems broken, doesn't it?
I agree with that. Like, creating more access to fast-growing companies benefits the public, especially retail investors. So wholeheartedly agree. Let me flip the other side of this. There's a more cynical view, which is that private markets, you have non-mark to market, and you can keep raising money and set your valuation, right? OpenAI took their valuation up to $860 billion. It was hard for them to close that round. Brad Gerstner didn't step in. SoftBank didn't step in. Microsoft, the partner that knows them best, did not step in and permitted them to work with Amazon, or at least didn't sue them for that. They renegotiated a deal. So the thing about private markets is you get to pick your number so long as you find at least one buyer at that price. You can just raise the price and market. And SpaceX needed a boatload of capital. So does OpenAI and Anthropic. Said another way, if they were listed on public markets, there's no way they would have achieved these valuations. They had to stay private for longer to raise the capital. The other story out there is Stripe. Stripe was a 2021 darling. They don't want the accountability of public markets. If they went public, they'd be hitting 52-week lows now, like Fiserv, like Global Payments Network, like pick your payments company stock. So I think the management and the VCs get it, and they want to raise money from silly investors privately while they can and enjoy the benefits of artificial mark-to-market valuation.
There's a long-term problem with that, though, which is that if the average American feels like they're not collecting the gains of the American economy through the stock market, you're going to, over time, see an increasing defection from the very ideas that make this system possible. And all of this does come down to structural incentives, as you were kind of implying, Ram. Like, for any politician listening, if you want to fix this, it's really simple. One, roll back parts of Sarbanes-Oxley that have made it incredibly painful to become a public company. And then two, significantly raise the taxes on disposal of shares where the valuation is higher than something like the lowest member of the S&P 500. That is to say, incentivize going public earlier and disincentivize staying private. All of this is fundamentally a question of economics, because if I can raise money at these valuations, take my time, not pay taxes, and then go public as late as possible, I'm going to do that as the business owner. And I will also tell you, it's kind of hard to fault people for playing the game as it's been designed, right? This is like intentional fouling in basketball. If it's a valid tactic, people are going to do it. If you hate it, change the rules. And so, Rob, let me throw the ball back to you and ask, how much of this is actually the companies doing it, and how much of this is just how the game is designed?
It's mostly the companies doing it to take advantage of raising money with extremely cheap funding. This is almost like 2021 low interest era type financing environment for companies in the AI theme. We talked a few weeks ago about how there are 60 plus AI unicorn companies, only 2 of which make even a penny of revenue. So it's just frothy. And what these VCs are doing is they're going to dump on retail investors. I'm all in favor, exactly what you said, by the way. You got to fix the incentives. You got to relax Sarbanes-Oxley. I think that's 100% on the mark. This dynamic wouldn't change, right? VC as an asset class has real issues. It's lagged every asset class. If you look at VC properly as an asset class, as opposed to looking at only top quartile returns, which is what most investors do. In US equities, you don't say, oh, let me show you top quartile returns. You show the index. Same thing for small cap, same thing for the Russell. You look at the entire basket. If you looked at the entire basket of venture investing, the returns are really weak. They're terrible. They certainly lag QQQ, and they don't compensate you for giving up liquidity. So what it really is this. LPs are willing to write the check to be a part of the story. They can go to the country club and talk about it. They get to say, oh, I'm a part of this investment. They're subsidizing the rest of us, which is phenomenal. It's a wonderful thing. It's a wonderful thing that we have these angel investors and VC funds making the world a better place. But it's not really a great asset class for investors. The CEO of Sequoia, he came out and said this in his last 1 month before he departed. He said, VC is not actually an asset class. And he walked through the returns. And I think I was pleasantly surprised to hear that. Probably had to do with the fact that he was maybe ejected from Sequoia. But that's the reality. It's an overrated asset class. The major indices have returned back-to-back years, 20% plus returns. It's really the confidence in the IPO market that retail investors will lose confidence in. They'll maintain confidence in U.S. equities more generally.
So Rob, now that you're done bashing VCs, unless you're an LP and an early stage investor in Anthropic, SpaceX or any of these major plays, if you were in that early round, you've done just fine. I think how many millionaires were created just now with the SpaceX IPO? So it's easy to indict an asset class, and in all asset classes, there's good, bad, and ugly. But there's also some amazing success stories if you pick the right managers.
Of course. Of course.
Though I will say one thing that I think people have not given Elon credit for in the SpaceX thing is how much equity they did give to employees at those companies and how broadly that was distributed. Right. One of the things that, back to Sarbanes-Oxley, we've seen is after the implosion of Enron, where people were putting their 401ks into the company stock, don't do that. Right. There was kind of this pullback from giving equity in general. I do think there's something meaningful if you have not IPO'd yet to liberally giving equity to employees so that on the way up, you bring them along with you. And I think that also goes a long way to fixing some of these issues versus VC.
Well, it's this wonderful story of capitalism and success. And I think this is something that as a public we have to talk more about. We celebrate the hero. We celebrate the entrepreneur. We celebrate Steve Jobs, Elon Musk, Jeff Bezos. And we talk about the innovation, disruption, and the benefits to humanity from all this technology innovation. But then when we talk about capitalism, people bristle. But it's the same thing. SpaceX is taking share from US government funding NASA. Tesla is taking share from GM and Ford. And there's someone on the other side of that that's losing. But there's a consumer that's benefiting. And that's why competition is in the interest of everybody. But we often, as a public, we are two-minded about it. On the one hand, we love the heroic entrepreneur, but then we criticize capitalism.
Well, I will say, I think that's largely a misunderstanding of capitalism. Like I have students and we talk about this, and many of the critiques of capitalism are not critiques of capitalism. They are just critiques of scarcity or like government action. Because if you're critiquing capitalism to me and the first thing you bring up is rules, that's a government problem. Because let me tell you this, regardless of what you think about Elon Musk, Elizabeth Warren is not the good guy here, right? Like everything that is being proposed there is value destructive. And if you don't like the rules of the game, think about thoughtfully changing the rules to get more of the best and less of the worst. But keeping the exact same rules and then trying to confiscate everything at the finish line is definitely the wrong path. So 100%. Let's talk about one more rule before we run out of time here, which is Reg NMS, aka Rule 611, the Order Protection and Trade Through Rule from the SEC. Created in 2005, it is the thing that has been a blocker for a lot of crypto, and the SEC just voted to propose rescinding it. So Alex Thorne, friend of the show at Galaxy Digital, said, this is a TradFi story, yes, but this is also one of the biggest unlocks yet for tokenized stocks. TD Cowen called it broadly positive and expects finalization in Q1 2027. So let's take the bull case. Paul Atkins, current SEC chairman, said after 2 decades of Rule 611, it's high time that the SEC review its unintended consequences that have hindered the long-term growth of our markets, and that things like on-chain AMMs have been effectively locked out of trading tokenized equities because they cannot guarantee the best national bid offer, even to be fair, if the user is not even looking for those. On the other hand, Joe Saluzzi says, co-author of Broken Markets, says Rule 611 protects retail investors from having their quotes traded through. This rescission will not reduce fragmentation and will only end up harming retail investors. So, Chris, I want to start with you as somebody who's lived some of this brain damage. What do you think of this whole debate?
I can't begin to tell you. This is a humongous deal. This is what exactly is needed to unlock DeFi, to unlock tokenized equities on chain. This was the rule. This was the obstacle. This was the hill that was standing in the way of this innovation. I can't wait to watch these comment letters come in, because when the regulator puts out rules, comment letters pour in, and people are getting armed right now, and they're going into a battle. This is going to be a major, major battle, because it completely rewrites equity market structure that's been in place for over 20 years. And hundreds of billions of dollars have been poured into infrastructure that allows certain companies to take advantage of it. And so you're going to hear, people saying, oh my gosh, you can't roll this back. We are giving retail the national best bid and offer. They're going to get the best price. However, the way it works today is that as that trade is directed to a national exchange, one of the flash boys steps in and slightly improves it. And that's how market structure works. And so why is this a big deal? Because now we have tokenized equities, right? And I've said again, tokenization is like electronification 2.0. It allows 24/7 access to markets. And to the extent you're able to now put them into DeFi, you can now avail yourself of their core strength, which is 24/7 global access. Yes, there's other things we need to sort through around AML, KYC, but that's totally doable. But now you don't have to wait for the market to be open, and you can deal with a more decentralized world where people can access markets direct. My sense is that after all the hemming and hawing you're going to hear, the people that really are winning in this market structure, I think they're going to pivot and they're going to win in the new market structure. Because think about it, if you have a more decentralized environment, the amount of basis, the amount of arbitrage is going to be much more profound. And who better to take advantage of it than the sophisticated players that are out there today? And so I go back to a conversation that I had with a buddy of mine at one of these shops, very, very sophisticated entity. And I remember we were going through Clarity, and he's like, listen, like, enjoy, we don't really care about your silly little tokens, but don't mess with my equities. Well, now equities are in scope. Wait for the fireworks. Once these comment letters hit, the battle is just about to begin.
I think one of the things that I'm watching for with this is what those comment letters are going to say, because the reality is our current market structure is probably not delivering the best price to retail. Chris, you've alluded to a lot of the complexity, but when you have the interaction of lit protected quotes based only on the top level quote against dark pools, things like payment for order flow, and an entire structure where it's essentially impossible to determine if I want to move a medium-sized block, am I actually getting the best price or not, that if, call it, comments come in defending Reg NMS on that basis, I think it's going to be very easy for the SEC to defeat them, right? To look at those and be like, guys, we know the flaws. If this is what we want to do, it's totally valid. You're profiting off this system. I think the disruptive situation here would be people proposing other alternative, call it trading methods, that probably do give better long-term price discovery. To get rid of some of the pernicious elements of high-frequency trading, you see things proposed like, why don't you just have auctions every second or every 5 seconds and just clear the top of the auction if people want to trade, right? Then you have fully disclosed prices on both sides that are commitments. So you don't have spoofing, you don't have fake orders, you don't have canary orders, like all these sorts of problems. I'm very interested to see how radical some of the reform proposals are. And Chris, to your point, I feel like there's kind of two fronts of battle here. One is going to be the people like the Citadels of the world who are currently winning, trying to defend their turf. The other one I could see piling in is some of the previous winners who won on things like balance sheet and order depth, coming in to actually push their preferred market structure and try to take back territory. Because if I'm a big bank, like if I'm a JP Morgan, if I'm a Citi, if I'm a B of A, I'm going to look at this as an opportunity, not just a threat, because they've lost a lot of equities volumes, and boy, would they love to win that back.
Great thoughts all around. I'd say one of the losers here is going to be Robinhood and other brokers that make their money through payment for order flow. Because if you have thinner bid offer spreads, which is the goal of this policy, then there's less economics for those companies. I don't think the market's priced that in yet. Retail investors believe they get free trades from Robinhood. They're not. It's Citadel is paying for the trade. So that's something I think that's probably a healthy thing. I think consumers should be smarter about how the economics of trade works. You might be better off paying subscription for higher quality execution where you've got someone acting in your best interest. But it could change the landscape of retail brokerage potentially.
Yeah, you know what? Who else wins in this? AI agents, because AI agents are amazing at optimizations. And so now if you have a much more fragmented marketplace, those agents are going to be the ones who can get it done. So watch that space as well.
All right, so you heard it here. The U.S. government simultaneously hates and loves AI and cannot speak with one about all of these things.
Exactly.
All right, well, on that note, I want to say thank you to everybody for joining us today. That's it for Bits and Bips today. Thanks for joining us today. Thank you for watching, and hope you enjoyed this episode of Bits and Bips. Just remember, nothing we say here is investment advice, and please check unchainedcrypto.com/bitsandbips for more disclosures.